All right, Mike. I appreciate the time you taking the time to have this conversation. I know it's going to be a kind of a bit of a nerd aspect when it comes to Navy, real estate, passive income. So I'm definitely looking forward. Yeah, Star Wars. So I'm definitely looking forward to having that discussion because all those three things I love. So if you don't mind, you can tell us a little bit about yourself.
Sure. So my name's Mike Cavaggioni, originally from Long Island, New York. Joined the Navy out of there back when I was 17 years old. Had to get my parents' permission. And after they signed me up, I turned 18 right before I went to boot camp, so it kind of worked out. And 2 weeks after I graduated high school, I was in the Navy. It's been a crazy ride ever since. Just hit 18 years this past July. I joined the Navy as a E1, a YNSR. It's the lowest rank in the Navy. You know that. And I'm currently an O3E, which is a lieutenant, prior enlisted, now commissioned officer. Uh, I've worked pretty hard to get there. It was 9.5 years when I actually commissioned, and it's been a really good ride in the Navy, and I've really enjoyed it so much. Besides that, I'm also a licensed realtor. I actually just got my real estate license a few weeks ago, and just joined up with the brokerage out here in Hawaii, Military Home Source, that they fall under Century Residential. They have an awesome team, and they've really been helping me out and getting me trained up, and I really appreciate that. I'm kind of learning the ropes there, and yeah, that's what I plan to do outside of the Navy when I retire. I have a duplex back in Virginia. So I have two doors out there right now. I'm actually looking at a commercial property, 10 units. Not sure if this is going to go through or not, but still running some numbers, so we'll see.
Okay.
That's kind of like the short intro for me. We can go into more detail as we talk.
Yeah, for sure. So I have a question. What made you want to get your realtor license, especially in Hawaii too, where I know that market is very expensive?
Yeah, that's a great question. So I have worked with some great realtors in the past and some not so great realtors in the past, right? So I bought my first house when I was 22, when I was a second class at E5, and I was on recruiting duty. And the realtor that I had when I bought the house was awesome, really helped us out, got us everything we needed, got us all set up, and it was a pretty seamless process. When I went to sell the property, I went through three different agents because that house was on the market for a long time. And the quality, you notice the difference between the folks that actually put in the time and actually put the effort into selling your home when you list it versus the folks that are just putting it out there and just throwing it on the wall and see if it sticks. There's a huge difference.
Okay.
I met some really good realtors out here in Hawaii when I did a local real estate investor meetup, right? And I knew right away what caliber of realtor they were. They were not like the realtor that I dealt with back in Virginia. And this was in Central Virginia, not my realtor that I have in Virginia Beach. She's awesome. But anyway, so I met these guys, and we were just talking about real estate investing overall. There's a group called Active Duty Passive Income, right? So this was our
Yes.
first meeting in Hawaii. And I've been following that group for a long time. So I went and checked it out, talked with a bunch of people there. I was already working my first real estate deal to buy that duplex back in Chesapeake. And, was running the numbers by some of the guys there. And they were telling me, give me some advice on what they thought. And it was awesome. Just the whole networking aspect. And I got to talking to one of the realtors that works for Century Residential. And he said, hey, if you really enjoy real estate this much and you have such a passion for it, why don't you consider getting your license? And even while you're on active duty, just do referrals. I mean, why not?
Yeah.
I said, okay, well, let me check it out. And he referred me to this course called the ABLE Seminar. I went and looked it up, and I said, okay, this looks like legit, like it's a good program. I'll actually learn something. I signed up for it. It's an expensive course, right? It's $475, but I found a code and I got $100 off.
Oh, nice.
So I took the course. And it took a while, right? Because I started in the course at the very end of February, very beginning of March. And as you know, the world pretty much ended around that time frame. We had COVID everywhere. So because it was a at your own pace course, I was kind of in luck, right? Because I was doing everything online. It had the audios, the videos. So I was still able to knock it out. The problem was I couldn't go into the schoolhouse at all and talk to the instructor. I mean, I had to do everything over email. It was kind of painful. So by the time I finished everything, I passed the real estate exam on my very first try for national, but it took me 6 tries. And I'm kind of embarrassed saying it, but what it is, full disclosure, 6 tries to get the state certification for Hawaii. And those questions are tough. Hawaii has some crazy laws when it comes to real estate, right? So passed the test. I got hooked up with the group, with the same people that have been helping me out. And I hung up my license with Century Residential with their military home source team. Now, what I like about these guys is everyone on that team is either retired or prior military.
Mm-hmm.
And really put forth that extra effort to make sure that, our target market is, active duty folks that are coming here to the island and helping them out, right? So they make sure they take that extra step to ensure that we're taking care of our servicemen and women. As a matter of fact, they just had me sign up. I took a seminar yesterday, a VA home loan seminar. They said, hey, you need to check this out. You'll be surprised how much you'll learn about the VA home loan that you might not have known before. And I was like, I know about the VA home loan. There's nothing else I could, learn about that. Well, here's my notes from the seminar that I took. 2.5 pages here of stuff I did not know. So that was really awesome. And I appreciate that they put me onto that. So that's kind of how I got started into real estate or into becoming a realtor. It all started from a meeting and talking with like-minded individuals. And the power of networking, I can't stress that enough, really help guide somebody, towards what their goals are. My goal has always been to be in real estate and every aspect of real estate. I love it. I feel like, there's something about real estate, it'll never go away. You're always going to need a place to live,
Yep.
right? And you're always going to need somebody to help you get there. So not a lot of people can do it on their own. So having somebody with the knowledge that can help push you in the right direction, and then you go off and do your own thing, And the other part about it too, and I don't want to get too carried away, what I really like about these guys is they're very investor friendly. They understand when you have an investor, somebody that's not coming to buy the house to live in it, they're buying it to rent it out, or they're just investing in real estate. There's a difference with the kind of realtor that you would go with, right? You want to get a realtor that actually understands investment. Most realtors are like, they're trying to push somebody into a property because, hey, this is going to be your forever home and we want to get you taken care of. They don't really understand the intricacies of somebody who's trying to buy a property for investment. So that's a little caveat that I want to make sure that people understand is if you are going to buy an investment property, make sure you find a realtor that actually has, your best interest in mind when it comes to investing.
And there is a huge difference between that because my first property that I bought, the triplex, there I had a real estate agent who was an investor. So she made it her point when I got that property that the owner was going to make sure I received the rent, being that I bought the house like in the middle of the month, something like that. So she made sure I got that July rent when I bought the house in July. And then my second real estate agent, it was a complete difference. She didn't know to ask that. There were certain things when it came to the tenant that was already in there that she wasn't aware to even ask about. And come to find out, actually, with the duplex, that tenant was actually a squatter. She left the house and skedaddled because when we asked for the lease, like the owner wasn't trying to provide the lease, and we finally got one. It was way off from what the tenant had said. It was a totally different aspect. And I think what you said was pretty much it was really gold as far as kind of you're gonna have to kind of filter out, hey, have you dealt with a lot of real estate, agents? I mean, have you dealt with a lot of real estate investors? And some of them will say like, oh yeah, I have. But you're gonna have to kind of do a litmus test. And I think that's one of the best advice we could probably give, especially people that's buying their first home as an investor. because you're right.
Absolutely.
There's a huge difference between, I mean, obviously, right. There are certain things, to be honest, there are certain things I would look for in my own home that if it was for a tenant, obviously you want to be up to code, but I may not be so picky on the floorboards, you know, on the what am I missing
Right.
out? Can't even think what the word is right now. And that funny thing is I just laid all those things down today. Shoe molding.
There you go. Okay.
Yeah. So
That's not fun.
no, it's not. Yeah, I actually messed up the floor today doing that. So frustrated day. But I think when it comes to I like the active duty passive income page because they are very it's a group that you feel like everybody just wants to share. Nobody's trying to hold secrets. Everybody's just like, hey, I
Right.
want everybody to win. And that's one big thing that you also said was this is not a, you know, property or get as much property as you can business. This is a people business. The more people you know, the better everybody will be well off. And those that understand that concept the fastest will, I think, scale up the fastest. But when it comes to Hawaii,
Absolutely.
when it comes to you being in Hawaii, what are your thoughts on the market out there? Because I hear it's like pretty much even more expensive than California, but I hear real estate investors still invest out there. Is the rent income there worth it based off of what the homes are cost out there?
Okay, so thank you for following up on that because I did miss that because that was a two-part question and I kind of missed that part. I went off on a tangent about learning how to be an agent. So yeah, so the market out here in Hawaii has, since I've been here, has always been on fire, right? So when I bought my home out here, my primary residence, I lost two or three, I think three other homes before I finally got this one here in bidding wars. If you're not paying full asking price with closing costs, you don't even stand a chance. Right now in the market, if you're not paying over asking price, you're not going to get the deal. It's insane.
Yeah,
So
same in
as far
Virginia.
as the market out here, it is 100% a seller's market, right? Now, and of course, it's going to be this way because of how low interest rates are, and people have the opportunity to buy a little more expensive house than they would have been able to afford if, say, the interest rate was 4%, right? So the market is absolute fire. Now, when it comes to buying a property to rent out, you're actually going to get a decent price for your rent. However, a single family home is going to be difficult to rent out and be able to cover your mortgage, right? Unless you put a significant amount of money down. So, for example, my primary residence, I can rent it out for up to about 3,800 to maybe 4,000 a month. My
Okay.
mortgage is almost 3,500 a month, right? So, if I was to rent it out and have a property manager and then, put money to the side for vacancies and maintenance, there's going to be no cash flow on this property, right? However, what Hawaii does do, and you'll appreciate this, is it appreciates, right? Hawaii is huge on appreciation. So if you look at historical data, the median household price out here doubles almost nearly every 10 years. It's worth twice as much. My house was built in 1997 and it was first sold, I believe, for 175,000. I can sell it today, excuse me, depending on if the market keeps going the way it's going, and if the other houses in my neighborhood sell at the price they're selling at, which is about $520 per square foot, I could sell my house for almost 1.1 million. It's insane. I bought it for 785 2 years ago. It's insane. So this market is definitely fire.
Okay.
Now, a lot of people think that a big housing correction is coming, and to say that it's not, you're not really paying attention, right? Because a lot of the same indicators that happened back in 2008 and 2009 are happening now. And you have people borrowing more money than they can normally afford because of the lower interest rates, and some of them are going to get eaten alive. You're going to see a lot of foreclosures, right? However, the mainland, so back there in the continental United States, back in 2008 and 2009, saw like a 40 to 60% drop in home value when the market crashed last time. Hawaii dropped 6% on average, 10% in the worst spots, 3% in the best spots. That was it.
That's not
So
bad.
when it comes to buying real estate in Hawaii, it's pretty safe. Now, it's definitely not a renter-friendly or landlord-friendly state, right? So you can definitely have folks squat in your home for quite some time, and there's not much you can do about it. But other than that, if you're looking to buy and hold, Hawaii can bring a lot of value.
I am anticipating there to be a lot of foreclosures and yeah, pretty much a lot of foreclosure and defaults on home loans because not only because of the fact that people are what you just mentioned, but also because of the fact that a lot of deferrals, right? A lot of people are doing either deferring their loan or they're doing the payment waivers where they have to it accrues interest over
Yeah, the
time and they still have to
forbearance.
pay the forbearance. So people that's still climbing up and people have to still pay that. Just like the renter people that are leasing, that's still accruing as well. So maybe some people maybe they get some type of settlement when this is
Right.
all said and done and catch up on their mortgage. But I think there's going to be a lot of people a lot of landlords and people that have single family homes and I think that will be part of the correction as well.
Yeah, so I actually wrote an article about this when they first announced like the forbearance and deferment. And what I think a lot of people didn't understand is you had to make sure that you talk to your lender and understand what you're getting into, because a lot of these folks were taking this 3 to 6 month deferment or forbearance, right? And we're essentially at the end of that 3 to 6 month period had to pay it back in full, and that ran into an even bigger problem. So there was other lenders that were saying, hey, we'll push it back all the way up to a year, all the way at the end of your mortgage, and that actually works out a lot better. So it's going to add a year to your mortgage, but at the same time it's a year of you not making payments. And I know they were trying to pass a law about this, and basically it was going to be like a forgiveness where the lender would pay the taxes and the insurance for the year, and then the mortgage all gets pushed to the back end of the loan, the mortgage payments. And I don't think it ever passed though. I kind of stopped following it when it lost traction. So there is a big difference between the deferment and the forbearance of whether or not you're just pushing it back and paying it in one big bulk payment, or actually deferring it to the end of the life of your loan, right? So your amortization is going to add another year. The other thing about that, and I just want to touch on this because I'm actually in this situation myself, right? I have a tenant that's not paying. So in my duplex, my upstairs tenant is not paying their rent, and they said, hey, they lost their job and everything, and I did everything in my power to work with them. When the pandemic first hit, I sent letters to both my tenants and said, hey, check this out. I want to work with you guys. Let me know if you lose your job or anything. Let's work this out. We'll figure out a payment plan, or I could push next month's rent, and have you pay it over the next 10 months or whatever. And it was crickets from my upstairs tenant. The downstairs tenant I didn't have to worry about because they're actually Section 8. So I was getting that payment no matter what. So I was kind of safe, right? Because no matter what, my downstairs tenant. So just a little bit of background on my duplex, right? So my duplex brings in $2,100 a month, $1,100 a month from the downstairs unit, and $1,000 a month from the upstairs unit. My mortgage on that property is $868. I pay my property manager and general contractor $150 a month. So my downstairs tenants that get Section 8, the Section 8 actually pays $1,070 a month of their rent. They pay $30. So I was getting that no matter what. So my mortgage and my property manager were always covered. But with the upstairs tenant not paying, I wasn't really making anything off this property. So right now, so come October 1st, he's going to owe me $5,500 because he's paid $500 at one point and then $2,000 at another point because he's working with some program that's supposed to be helping. And they made that one payment for $2,000, but it's been crickets since then. So yeah, waiting to hopefully see if I'm going to get something else here soon. But I can't do anything about it at this point, right? Because they passed that law where you can't evict anybody.
Yes. And I'm glad you mentioned about
So
Section 8.
yeah, and I don't. Here's the thing. I tend to treat my tenants, and you know, I don't even like calling them tenants, residents, right? Because they're human. They're human beings, and I'm not about to be that guy who puts a family out on the street. You know, both of them lost their job. You know, I get it. Even if they're BSing and lying to me or whatever, they got a kid or they got two kids. I'm not going to put them out on the street. You know what I'm saying? Not during this time, not when things are crazy. So even if we could evict at this time, I don't think that would be an option for me unless I knew that they were going to be able to find another place to stay. You know what I'm saying?
Understandable.
And that's just the human in me. And you know, if there wasn't a pandemic, I'd be like, see ya. But you know, with the pandemic going on, I can't do that to a family. So I try to explain to people that no matter what, you need to always look at the human side of things and realize that the people that you're dealing with on the other side of that computer screen or the other end of that phone call are human. They're people just like you, and their situation might not be as fortunate as yours. So you got to take all of that into account. I can afford to not get paid for a little bit. You know what I'm saying? And again, that's just the human side of me coming out. The landlord side of me says get them out, but you know, it's a conflicting battle all the time. So I just want to put that out there.
And that's not talked about often, right? The humanity side of it. You know, you have people that are going through tough times, and at the same time, we still have our own bills to pay. And what I realize is that a lot of residents believe that every landlord's a millionaire and that they can suck it up
Right.
and take it.
Right.
And that's not the case. Some people are upside down. Some people had a bad deal, and both tenants paying their rent means that the mortgage actually gets paid. So because everybody doesn't calculate the same way. But I'm really glad you mentioned Section 8, because those landlords that had Section 8 during this time frame are really insulated in from any recession or COVID-like matters. And in your case, right, your mortgage is covered because of Section 8. And Amir and I was just talking about that because there's a 3-bedroom right now that we're doing turnover on, and we've made up our mind because that 3-bedroom was $950, and the mortgage there is $950. So that 3-bedroom covered the whole mortgage, and then the other 2 bedrooms, the other 2 units covered the cash flow. And so now with Section 8, we can rent it out for like $1,500. But I know if I was to privately go out and get somebody at this point in time, I probably wouldn't be able to get nobody for $1,500. But through Section 8, I can. That way my mortgage is covered and a little bit more. That's a $600 increase, and I don't have to worry about my
They approved it for.
It's actually
for $1,500.
It's actually $1,650, and so you can max it out. But I like to be conservative.
Yeah.
But this is in Portsmouth. It's $1,625 for a 3-bedroom in Portsmouth.
Okay, so is that the fair market value for rent?
Yeah. For the fair market. So what
about your other units? You gonna look at raising the rent a little bit on the other 2 units?
So the 2-bedroom is right now rented for $700, and that's kind of fair. If I could bump it up to like $800, but I've been creeping the rent up on that one. So when I bought this property a year ago, the studio was rented out for $400. I bumped it up to $500. The 2-bedroom was rented at $600. We bumped it up to $700. And then the 3-bedroom, she's been consistent, and she just moved out. So we've increased the income of that home by a few hundred a month since just within a year.
Okay, yeah, that's good.
So there's a lot of potential in that area in Portsmouth, and we're trying to. There's a triplex, basically the same build right next to the one we have, and I've been trying to get in contact with the owner for months because there's like a lot of bad traffic. But if I was able to get that house and then the plot he owns next to it, it would totally change the neighborhood because it helps me anyways, and it helps the neighborhood because it's affecting the value of my home next to it and people feeling safe. You know, with that 3-bedroom, it's more than likely a family that's going to live there. And so I want any resident that's going to be there to feel like they're in a safe environment, not some building next to it that got burnt damage. But I think throughout this time frame it's going to be very interesting because right now for Virginia, we have to wait till December 31st to figure out where we're going from here as far as kicking people out or going to court, back to court for evictions. And I have also a guy that owes me.
My property's in Virginia, so.
Yeah.
I'm
I
stuck waiting like you guys are for sure.
and I also have, we also have a guy that owes us about $6,600 between utilities, yeah, fees and rent. And he said he just
Okay.
got a job, but don't see where the money's going, because I think everybody got the word, hey, I could sit on my behind and not pay rent. And it wasn't until I contacted
Hmm.
one of the residents and told her, hey, look, you are still liable, responsible for this rent. Rent's not free. And my old property manager told her that she didn't have to pay June rent because of COVID. So she thought she didn't have to pay June rent at all, and that everything else was just a
Mm.
freebie from there on out. And when I explained to her, you will be the owner, we'll still take you to court. We'll still try to have a settlement, and you will still owe all this money. The light bulb kind of went off, and she was like, wow. So I think there's a lot of tenants that think that they're free and rent is canceled, when really that's not the
Right.
case. Because I it's
Right.
mostly
And
probably word of
you know,
mouth.
same thing with my tenant. If they don't think that I'm going to take them to court in the future, then they got another thing coming. Especially right now, with it's going to be up to 5,500 come October 1st. I mean, that's a nice chunk of change where I can take them to small claims court and it'll be worth it to me to do so.
Yes,
So
I mean,
if it
if
was
you
just
got a
like a couple hundred
5,500,
bucks, I'd be like, I'd leave it alone. Yeah.
I totally agree with that. What are some other? So you said about the commercial. You're working on commercial properties. You said 10 units.
Yeah. So there was a 10 unit I was looking at, but you know, it's still it's up in the air right now, and commercial property like large multifamily is kind of the next thing I want to get into. So there's a group out here that I'm a part of called Honolulu Multifamily and More, and we have a monthly meeting where we hop on a Zoom call. We used to do it in person, right? But we hop on a Zoom call and everybody talks about like what deals they have going on, or just what do they have going on in general. And there's always an education piece. So we go through and we learn something new at each time. And then we have these breakout rooms, right, where there'll be like two or three people all get assigned to different rooms, and you just have a conversation. And we have a list of questions that we talk about, and it's really cool. I enjoy it. And during the last meeting, one of the guys who's pretty much one of the heads of this particular group was telling me like, hey, why don't you get into commercial real estate? Look at what we just did with this deal out here. And that's one of the things we've been talking about the past two meetings with their last deal that they just closed on. And when he was explaining to me how when you buy these larger commercial property um, rentals, that or the apartment complexes and everything, how you can force appreciation. And it was just fascinating, just learning how they did that. I mean, just small little things that they did to save money and also raise the value of the actual property itself. Because property like that, the value of it's determined by how much rent is coming in, right? How much the property makes and how much each unit can rent for. So each unit gets pretty much a price over its head. So like for a 50 unit, it's like, okay, well, we want each unit to be 75,000 a piece because it rents for this much, right? So just, just the little things that they were talking about, it was just so interesting. And one of the things that I found that was really awesome that saved them a lot of money was on their water bill was they installed the restricted flow shower heads and the green toilets, that use less water. And just by doing that, 50 units, they saved a significant amount of money on their monthly expenses, which of course added to their NOI at the end, right? So they had a larger net operating income to do what they needed to do with it. And just it really, it's just there was just something about it that's like I want to get into that space next, right? I wanted to buy a few more like maybe single family and small multifamily units, and then get right into the commercial. However, I'm thinking all the commissions or anything that I save right now, I want to put to the side to put as raising capital for a commercial deal. So the one that I'm looking at right now, I don't quite have the capital that I need for it. I was looking at different ways to get it, but it would cost me $168,000 to put down on this 10 unit. And after all expenses, vacancy, property management fees, and everything, was going to net me just over $2,100 a month, which when you think about it for 10 units, you might think that that's not that much, but it's actually pretty good because if you divide that over the 10 units, it's over $200 per unit. So, and
Exactly.
that's kind of the goal where you want to be, between 150 to 200 or plus per door that you're bringing
Yep.
in. So I think the numbers are pretty good. I'm just still looking at the possibility of raising capital. I was actually just talking to a lender the other day about doing a HELOC and pulling equity out of my primary residence here to make that down payment. So not quite sure I can get there, so this one might not happen, but that's kind of where my mind's at right now when in the commercial space.
So I haven't got a chance to really have too much conversation with people about commercial, because a lot of people that I talk to are entry level, trying to do small multifamily, single family. But that is something Amir and I was definitely discussing.
I'm still entry level, trust me.
Yeah. Because
that's why I'm average Joe,
All right. I like commercial because of the fact that, like what you said, you can save and also increase in big ways. You see the fruits of your labor probably a lot better in the commercial real estate, but it is a lot to put down. And so that's why I wanted us to get to at least about maybe 10 units, and then possibly look at the deals that weren't the best deal, don't have the best cap rate as maybe the other ones, and then sell those into my down payment for the commercial property. So sell 5 units to get to my 8-9 is what we were looking at doing, because sometimes you can make okay deals, a great deal if you push towards, like we have one duplex where we got if we split the water taps and make the tenants pay the water, that would save us a whole lot more money, and then that would increase the cash flow a whole lot more. So like there's ways people may think that, like, oh man, I bought a bad deal or the deal wasn't the best. There's kind of ways to kind of finagle, like the toilets, like you said. I didn't know that there was water controlled shower heads. So I'm going to look into that. Mm-hmm. Because I pay the water.
Yeah, you see the commercials for them all the time. The ones that have like the little beads in the shower head, that actually restricts the water flow. It keeps the pressure high enough where it's not like you get all soapy and you can't get the soap off you. Those are really good. I actually had one in one of my properties back in Virginia when I lived out there, and it was awesome. Definitely saved us some money.
So you spoke on about how, before we started recording, how you are a couple years away from retiring if you so choose. Right. And a lot of people don't have the luxury to say, hey, if I get out at 20, I'm still good. Could you give just some info on why are you so comfortable to be able to retire at 20 years? By some people may be like, oh, I'm at 20, I'm not ready to get out.
Sure. So besides real estate investing, right, which is still fresh to me, it's still something new that I'm getting into. I invest in other assets as well, right? So you obviously know what the thrift savings plan is, but for the listeners that are not military, the thrift savings plan is basically an IRA. So I invest in a Roth thrift savings plan, and I also have some money in the standard, because sometimes I throw money in there when I got to lower my taxable income, so I'm not paying so much during tax season. Actually, this year I think I'm going to wind up having to pay for the first time in a while, and that's a good problem to have if you have to pay taxes. That means you're making money, right? So so besides my Navy pension, I've got a couple other investments. I also have a joint investment account with a financial advisor that I went through here. I have 2 whole life insurance policies, one of myself, one of my wife, that has a cash value to it. I have, and besides that, for life insurance, I also have a term life insurance policy that's put up against the house. I have over $2 million on myself alone in life insurance, and a lot of people kind of hate on life insurance, but to me, especially in being in the military, I feel like life insurance is a must-have. You need to protect what you own and protect your family, right? So I know that if something was to happen to me, heaven forbid, knock on wood, right, my family's good. My wife already knows what to invest that money in if she got it, right? She's not just going to go, oh, I'm going to pay off the house, I'm going to do this, I'm going to buy a new car, and then we don't have to worry about anything, we're good. She's going to invest it in dividend paying accounts, high yield savings accounts, and just live off the interest and live off the dividends, because there's no need to spend that money, right?
Yeah.
So anyway, besides that, my pension from the Navy, I'm expecting to get a decent disability because I've got some service related things going on. On my last deployment, I was exposed to burn pits. I come back and I come out here to Hawaii and they say, hey, you have severe asthma. And they found like polyps and stuff in my lungs, tumors on my liver and stuff, and all benign, thank God, right, for now. So I gotta get scanned every year though for the rest of my life. It's crazy. So things like that. I should get a disability check. I'll get my Navy pension and the other accounts that I have. So right now, I'm at a point where essentially all of my expenses, like if I was to stop putting my money into my investment accounts, because I invest a significant chunk of change every month with my budget, right? So if I was to not pay those and then just pay my expenses with my retirement and the other dividends and everything else that I have coming in and rental property income, my expenses are covered. So to me, when I retire from the Navy, I will essentially be financially independent, right? So if you look at the FIRE community, right, it's financial independence, retire early. If I retire at 20 years, I'll be 38. That's pretty early for retiring. If I retire at 22 years, I'll be 40. That's still pretty early for retiring. So I still consider myself to be part of the FIRE movement, right? Because I'll be at that point. Now, not everybody, is in the similar situation where they have saved up enough or being in the military, they're going to get a pension after 20 years of being in a certain job, right? And that's why it's important that you start investing as young as possible. Our sailors and well, actually all service members that are joining nowadays, they don't get the pension that you and I are able to have. They just get a matched, they get a matching to their thrift savings plan, similar to what a private employer would do for a 401k, right? And to tell you the truth, I wish I had that instead, because I could have been retired right now. Because if I would have just been putting all that money into TSP and getting it matched this entire time that I've been in the Navy, I would have millions, right? It's all about how aggressive you are. Now, I do invest very aggressively with my thrift savings plan. So I have 70% in C right now and 30% in S. So yeah, I take these hits when you see the market drop the way it's been dropping, but when it goes up, I'm going up too. I look at the times that it's down as buying it at a discounted price.
Yep.
I don't look at it as I lost money. I just look at it that, okay, my assets lost value, but it will come back. It always bounces back, right? Even when the market corrects itself, it bounces back. So it's pretty safe to say that as long as you stay in the market, that the time in the stock market is safer than timing the stock market, right? And a lot of people don't understand that. They just want to, they want to sit here and wait until it drops down and then they want to get in. So I actually watched a video not too long ago of, there's a YouTube channel that I follow. His name's Andre Jick, right? He's awesome. He talks about investing in the stock market. And he did these 3 different scenarios where one person, and this is all dating back to 1979. One person invested consistently in the market. The other person had perfect timing and invested every time the market crashed. And then the other person just saved their money. And then he shows the numbers at the end. Who do you think had the most amount of money at the end?
Definitely the stock market. And I think what you refer to cost price comparison. A lot of people they want to, as soon as, let's say my stock is $50 and it goes down to $30 or $20, which has happened during COVID in March April timeframe.
Oh, yeah.
I noticed everything dipped, right? So everybody got scared and a lot of people sold all their stocks versus buying, let's say Tesla, because Tesla was like, I think at its lowest went down like $400. And or even for people that
started on Tesla.
And so
I've
then
got
it went
some
into like
serious
$2,000
FOMO going on with Tesla.
It went all the way up to $2,000 before it split. So if you just for those that stay consistent, or those that got aggressive and bought their first Tesla stock at that time, just within a 9-month time frame. Now Tesla's a different beast. But on
Lucky.
average, like the S fund or the C fund on TSP, those things have those two funds have consistently done over 10% of last decade. And so, yeah, you're
Right.
right. If we had BRS, which is blended retirement service, is it service or is service, right? Blended retired, what is it? What's the S part?
System. Yeah. Blended
System.
retirement system.
Yeah, service. Everything's a service with us in the armed forces. But yeah, blended retired system. If we did have that match plus the 15-20% most of us do, let's say for the 20 years, you're right. It would have been a big difference. And would we be able to eat up because they get 40% at the 20-year mark versus the 50? I think based off what the market has done the last 20 years, I would, if I had a crystal ball, I'd take that bet.
So, real quick, so just to go back to what I was saying, though, the person who actually made the most money out of those three scenarios was the person who consistently invested every month, not the person that timed the market perfectly. They
Exactly.
actually wound up with about $700,000 more dollars investing the same amount of money. So, with the blended retirement system, uh, for the folks that had, I would say, less than 10 years, definitely should jump on that, right? But you know that's only for a short period of time. After that, it's going to, they're not going to have the option for blended retirement anymore, right? So the folks that are joining now, they don't get that option. They get a 5% match, and that's it. There is no, you do 20 years, you get 40%. That is gone. So that
Mm-hmm.
was just for the folks that were still in. You had the option to opt in. So now folks joining, they have an opportunity, no matter what, 5% in, because the government's going to match that 5%. That's free money. Like, you have to do that. Uh, and then, a lot of people don't like it because, especially when you're very young and junior in the military, you're not getting paid that great, right? So they feel every little 5% or whatever coming out is pretty significant to them, right? But I'm telling you, the young men and women joining today, if they consistently invest at least that 5%, and then they get the 5% match in the CNS fund from the time they join, and they just do it for 12 years, they can have hundreds of thousands of dollars by the time they hit that 12-year mark. If they invest a little bit more, they invest 12% of their own money and get a 5% match with 17% going in, they can essentially be a millionaire by their 12-year mark. It just depends on how aggressive you get.
Yeah.
It's insane. You can just be like, okay, I did my time, I'm going to retire now. I'll get out at 12 years and go, do another job that I could just pay the minimum of my expenses, because when I hit 59 and a half, I'm good. And that money's just sitting there, just with that compound interest, just growing and growing and growing, waiting for you to hit retirement age. Or you could say, hey, I'm at a good point right now, there's nothing there. I'll take that 10% penalty and pull it out now, and then go invest it into high dividend paying stocks or REITs. I love REITs, right? When it comes to, if you want to put your money somewhere safe and then just collect the check, REITs all day, or like some safer dividend paying stocks. There's some good index funds that pay dividends as well. So I try to explain to people, like, if you come into a large windfall of money, be careful what you do with it. Don't just go and spend it all. Split it up into different asset classes, right? So there was I don't know if you saw that article on Reddit not too long ago where the guy was talking about how his grandfather passed away and left him 7,000 shares of Apple. And this is pre-split. So it was worth about $3 million. And I was kind of talking about, I wrote an article about it too, I was talking about what I would do with that money, how I would split it up. And there was, I would buy some real estate. I would invest it in these different index funds. I would invest it in these different REITs and stuff like that. And then I showed like a calculation of how much I would make per year just by investing in all these different things. And still, even keeping it safe, even with keeping, I think I had 500,000 in a high yield savings account. The other 2,500 was all split around. I was going to be making around 400,000 a year in rental income, dividend payments, and REIT dividend payments. So, and of course, interest on the high yield savings account. It was just over 400,000. It was insane. So there's a lot you can do with your money to make it work for you and make more money. And that's, that's kind of the thing that I talk about. It's not just real estate with average Joe finances, right? We talk about everything from side hustles to different things you could do with your money to basically employ it, treat your money as an employee and as your friend, right? Build a relationship with it and let it do the work for you. And I think that's the most important thing people can do.
Yeah, and I think that's one thing I do like. The concept of passive income is the fact that you don't have to be on site. The money can work for you if you do it right. And that's the real value in not having to, when you think about it, I did the math when I was a seaman, amount of hours I put in, and obviously what my paycheck was. And when I was a seaman, I got paid $515 and a paycheck. And I divided that by the hours, and I was making 36 cents an hour as far as how many.
Oof.
Yeah. And so highway robbery, I'm an indentured servants type salary. So, and I think about now, 11 years later, I've been in the Navy. I think about as much time I put into the Navy. Imagine if we had how much time, if we had put that much time into a business, there would be no cap. There'd be no ceiling to what we'd be able to accomplish. And I think that's what I love about real estate and passive income and these side hustles that can become passive income that you don't even have to touch ever again, because you don't, once you put in the work, it could do its thing. Obviously, I don't believe in it truly passive. Obviously, there's some maintenance that has to get done and some attention that has to be given to whatever way of income stream of income that you're receiving, but definitely not as much time as we put into the Navy, because I know you bust your behind to make LDO, how many hours you had to put that in to become a commissioned officer. And then now that you're approaching 20 years in service, obviously 20 years is a lot of time. Definitely getting paid dividends for that. But I definitely think about, especially now, I always try to think, okay, is what I'm doing right now, what is my return on my investment? Is me going to a property and demolitioning, yeah, I'm saving maybe $1,000, but could I be making more money spending my time doing something else? And so, because I think a lot of times, especially when a lot of us, when we first come into the business of real estate, we think, okay, how can I save money? Right? Oh, I can paint. I can put down shoe molding. But there's sometimes, and we have to kind of catch ourselves. Sometimes we have to say, all right, is this worth the time to do this? Or could I be doing the podcast like what we do, or writing down blogs that eventually will, work itself into the SEO. And then before you know it, average Joe shows up on Google more than it did 5 years ago, because you were consistently putting in blogs and putting out content, and obviously staying consistent. And so I think this is going to have to be a two-parter, or we could finish it on when you interview me. But there's definitely a lot of information that I think we covered and we need to still cover, because I think a lot of people need to be educated on, there's just different ways to be successful. And as a active duty member, there's so many ways you could double dip between the TSP, between the VA loan, or obviously, the programs that the military provide, like being able to, as enlisted, being able to go all the way to E9 or switch over to officer. Then now you have more money to invest. And so, dang, yeah, this is good.
Yeah. Hey, so real quick, I just want to say I've been listening to your content too, and listening to some of your interviews, right? Just trying to see how the flow of your interviews were going as well with other guests that you had. And actually, you were talking to one guy recently. I think he was a chief, and he got out, and he was a realtor, and he was talking about this one LDO who approached him and basically said, that the guy he commissioned, and he had like 20 years of straight sea time. Like, that was insane. So I just want to put it out there for you, because I know in your job field that you would commission under the same program that I'm under. Don't worry, man. We don't have that much sea time, okay?
Yeah, I saw the CISO rotation.
So, like for me, I commissioned, I went to the carrier, and then I've been on shore duty ever since. So I did the time in the carrier, then I did 3 years at Naval Special Warfare Group 10. Now I'm doing 3 years at Pac Fleet, and I'm going to do my next 3 years before I retire over at the shipyard out here at Pearl Harbor. So that's pretty much 9 years straight of shore duty, so I'm not complaining about that.
No, not at all. Yeah, not at all.
Hey, man, This has been awesome. I would love to come back on another time. There's definitely more we can talk about. Uh, I really appreciate everything you're doing. I think you got the right state of mind with the direction you're going with your podcast. I think being able to talk to somebody else who's like-minded, and also you being a bit younger than me. I mean, you're pushing forth at a younger age than I did, and I think you're going to be well on track for you and your family just to build that legacy. And that's the other part of why I'm doing what I'm doing is I'm trying to build a legacy of generational wealth for my family. Right? This isn't for me; it's for them. And over the next couple of years, as I build Average Joe Finances and I build my uh, real estate reputation, and then get fully involved in real estate as a realtor after I retire from the Navy, I feel like I'm going to be in a good spot where my blog and my podcast will also be bringing in an income and put me in a much better spot when I retire. So there's just these little things that you can do while you're younger or while you're still in the service that can help set you up for so much more success by the time you get out. And man, you're on it. You're doing the right thing. So I just want to say I see you. I see what you're doing. I appreciate it, and I appreciate you having me on to talk with your audience. It's been pretty awesome, man.
No, yeah, I appreciate you taking the time as well, because I was able to still learn some more information just from the things that you said. The Hawaii market has always been very intriguing to me because it's Oconus, but
Yeah.
it's still connected in some way, but it seems to have its own flow. It doesn't seem to be
Oh yeah,
affected
it's its
by
own ecosystem out
Continental.
here.
Yeah. So I always found that very interesting. And so I do want to close it off with, uh, and you maybe touched on it a little bit, but what do you consider your rich state of mind when it comes to what you do for your family, the business, stuff like that?
Sure. So I'm pretty sure this is like what my why is, right? And, why is it that I'm doing what I'm doing? I kind of did just touch on a little bit. It's you know again, I'm not doing this for myself. Yes, it's nice that I can get myself to a point where I'm making enough money to where I don't have to work after I retire from the military, right? But at the same time, I look at the sacrifice that it took to get here. And when I retire, if I retire at 20 years, my oldest daughter will be 13. If I retire at 22 years, she'll be 15. So still a pretty decent enough age to where I could really spend the next couple of years of her life with her before she hits adulthood and really be involved. And one of the things that I enjoy right now is I've been pretty fortunate to be able to have the time I've had with my children since I've been in the Navy. That's one thing I can definitely appreciate. But the freedom that you have when you reach that financial independence number is the number one thing. So basically emancipating yourself from the shackles of society and just having to do the 9 to 5 thing, right? I think that's so important. And when you hit that point, what do you have left? You have time. And what is time? To me, time is money. Time is value. So if I spend that time, what I hold most valuable to me with my daughters, and they realize that, with how much I value time, that I'm giving it to them instead of work, it's going to mean so much more to them. You know what I'm saying? And I want to know that when I leave this planet, that my daughters appreciate me for spending the time that I spent with them versus spending the time working until the day I died. You know what I'm saying?
Yes.
That's my why. That's my rich state of mind.
I appreciate you breaking that down because it's a big, and I talked about that to my father, where our kids are our biggest investment to me. Like more than
Absolutely.
any real estate property that I could ever find is my being able to invest in my kids is the best thing ever. And what do we need? We need time. And so this passive income, growing the different
Yep.
streams of income, gives us the time, and retiring allows us to be able to spend that time with them, because you're right. Those high school years, those teenage years definitely require a lot of attention, a lot of patience, and our kids deserve it. right? They deserve it. So thanks a lot,
Absolutely.
Mike. Thanks a lot for taking the time, man. I look forward to us doing this again. Please, hey, send me a schedule invite for whenever you'd like to do this interview, because I definitely will make the time to do so.
Absolutely. Sounds good.
All right, man. You have a good day.
You too. Take care.